Did I just lose Chris there? Oh, good Lord. It's one of those days, Chrissy Chris. Looks like your internet's coming in and out there. But it's just,
Can you hear me?
yeah, I can hear you now. Just your camera is a little fuzzy. But hey, it's going to be one of those days, it looks
Oh,
like, bro.
it's Friday. Why is
Looks like,
this
all
a
right, there you
Friday
go. There you
thing?
go. YouTube picking up. YouTube woke up. I don't know what the hell happened there.
Is YouTube up?
YouTube has been having problems, guys, with their data. Just to give a news out there, definitely. Yeah, YouTube's up, guys. All right, so I'll show you guys here. YouTube is up. So definitely, guys, if you guys can do us a favor and hit that like button, hit the subscribe. Let's go to that share button. Hit the share with everybody. We got AeroFarms coming on next, guys. Sorry about a little technical difficulties there, but let's go ahead. Let's get right into our headlines now that we got everybody here, Chris, and I see your camera looking better. So.
All right, guys. Yeah, let's get to headlines today then. So as I just said, no new deals today. We do have one rumor out there, but some notable headlines to nail down today. Before we look at that watch list and before our interview. So up first, we have SRNGU. This is Soaring Eagle, still trading as units. Those units are going to split next week on Monday. So remember, this is the SPAC from Jeff Sagansky and Harry Sloan. Rumored to be going public with Ginkgo Bioworks in one of the largest SPAC deals. So you're going to be able to buy warrants and common shares on Monday. I do own units here, so I'm curious to see, what kind of reaction we get on this next week. A couple ratings out there. We have GIX benchmark initiating with a buy rating and $14 price target. We have RSI, Rush Street Interactive, Jefferies out with a buy rating and $21 price target. Former SPAC EQOS, which is one we mentioned, as a possible Coinbase IPO, sympathy play. Down yesterday, there's a report I'm seeing out there calling it a crypto zero, similar to a short report out there. So definitely keep an eye out on EQOS. We have DKNG, DraftKings, landing a big deal. So DraftKings, FanDuel, and Caesars Entertainment were all named as the official sports betting partners of the NFL. So also those companies agree to use the official data feed of the NFL, which we know, of course, now belongs to Genius Sports. That's ticker DMYD. So, DraftKings, one of the best performing former SPACs, and, it goes without saying that they're a market leader. They're a well-known brand. They're in a dominant position in a growth industry. They were, of course, our winner of the March SPACness tournament, too. So big shout out to our chat for nailing, DraftKings there. But also, I have to highlight DMYD here with Genius Sports. So, they're getting that exclusive NFL deal, and it comes at a time when, sports betting is growing, but also now the NFL is going to go hard into sports betting and integrate their media with it. And 3 companies right here have already then signed up to be official data feeds for the NFL via Genius Sports. We have FSR Fisker, which I do own shares of. Henrik Fisker last night on Twitter, sharing another milestone. So they passed the 15,000 reservation mark for the Fisker Ocean electric vehicle. GIK, merging with Lightning eMotors, announced that they are partnering with Rev Group to produce electric ambulances. So keep an eye out on that one. NGA merging with Lion Electric, which I own shares of, signed a deal with IKEA for electric trucks in Canada. So Lion Electric keeps adding more and more deals here, both in the US and Canada. Keep an eye out on that one. And then IPOE, David Einhorn last night calling out Chamath and Elon Musk for helping specifically criticize SoFi, which is going public here with IPOE, as helping, to make that move possible. So, some bad blood in the tech world there. Einhorn going after Chamath and Elon Musk. And then some movers. We'll get to the watch list in a minute, but I'm seeing Clove, CLOV, up 19%, being mentioned as a short squeeze. Our deals yesterday, we had DEH ending the day up 1% on that deal with Vicarious Surgical, and CHFW down slightly on their deal with Surazin. And then our other big movers, we had QS down 12% on that short report. SPCE down 14% after Richard Branson sold a part of his ownership position, and people sell off on that news. I do so own shares at SPCE. And then our lone rumor out there that is new is TVAC. This is Thayer Ventures Acquisition Corp, being rumored by Bloomberg to bring luxury travel startup Inspirito public at a deal that could be worth more than $1 billion. So that's what I've got, Mitch. Again, not a lot out there, no new deals, just that rumor, but a couple notable headlines. And I'm sure as we pull up that watch list, we can dive into some of those names here.
Yeah, Chris, as you always do, doing some research here, guys. I wanted to note one here, guys. Note one here. Definitely going to be paying attention to see what's going to be going on here with the ride life. They're going to be going to do the San Felipe 200 here, so in a competition. So keep your eyes out to see what goes on with Ride, as we're seeing a lift today from Ride. So you're seeing their vehicle here. It's kind of interesting, Let's see how they compete in a competition that has to do with endurance and reliability, right? And so that's what's going to be interesting. I'm going to watch that. That's going to be this weekend, and that's with Ride, guys. So that's going to be interesting. I don't know if you caught that, Chris.
Yeah, I caught that. I heard it discussed on pre-market prep this morning too. I don't know if that's much of a mover for Ride here. Definitely a nice spotlight.
Why do people not? It's
and some
important.
Nice news, but I think they need to start fulfilling some of those orders. I mean, Ride was one of those companies, criticized a little for, are these real orders? Are they, obligations? And let's get that revenue going.
Yeah, what I'd say is, I don't know why so many people are not seeing this as a catalyst. One of the things that I would say is that the reason why I see it a catalyst, right, is that because if what came in the short report, right? It came that the vehicle didn't work, the transmission, that it was unreliable, and that it blew up, right? Like it got on fire, right? And so one of the things that we want to see is, can we get some reliability? Can the car make it to the end? Because if the car makes it to the end, I'm telling you, it's going to be a positive driver for them in my eyes, because at the end of the day, it just shows that the vehicle does work. And that was what came in question with the short report. To me, what came in question wasn't that, this company can never create a vehicle or something like that. It was more in question, can they get it out in September? Does it work? Do their prototypes work right now? This is a prototype, guys. Let's see how it does in this race. If I makes it to the end, that's more than enough for me. I'll keep an eye on that to see if it makes it to the end.
Mitch, isn't the flip side of that though, is this worth the risk for them? This is a high endurance race, and what happens if they don't make it to the finish line, or if they have problems? Is there going to be a sell-off here versus just, demoing this truck on a flat course or on a roadway, instead? So to me, I don't know. I don't know if the risk is worth it here. But again, great PR, great news-worthy, headlines we'll have Monday. But the question is, will those headlines be positive or negative?
Yep, we'll definitely keep an eye on it. I'm going to keep an eye on it. I think it's on ESPN this weekend. So if you guys want to take a look at that, you guys can take a look. As you guys know, I've been talking about Clove, potential short squeeze, man. Potential short squeeze. It looks like it's really starting to get moving here. Just want to pull up that chart. As we've seen What do we need to see, guys? A lot of the times I've talked about this is that we need what? Volume, right, guys? Volume is what brings these stocks right back up. And as you're seeing it today, guys, let me show you guys. We saw this first pop, right? And that was with volume, right? That was 76 million shares, right? And it pulled back where? Right back to the support of that. Right back in support. So if you get caught jumping and going for the big move, if you look for that pullback towards the support, you could have caught it again. And now you definitely have this support look underneath it, guys, at that 735. So that's kind of the line in the sand on the other way down. But I like this. And I'm going to keep an eye on Clove. I really think that, the story can change here. And with that story change, I'm going to keep an eye out on IPOE and IPOF, because maybe with that story coming back, some favor coming back to Chamath, maybe you see a release of a new company there. All right, Chris, let's go ahead and let's get into the time that we like to go ahead and unlock some SPACs. I don't know if you want to add something there, maybe potentially something move off of that Clove. What do you think?
Is David here? We should probably get to that interview, but we can circle back to Clove later on, definitely, and see where that's trading at the end of the show. So remind me, I do want to hit on Clove a little. So.
All right, guys, let me go ahead up. And before we bring on Clove, I want to go ahead and hit this up right here. Just let me make sure I got the audio correct. All right, let me put this full screen here, guys. Just I'm going to play a little small clip here. I'll probably play about 20 seconds here just to give you guys a little bit of insight of who AeroFarms is here. So let's go ahead, put it on the screen here and mute myself.
I'm David Rosenberg, co-founder and CEO for AeroFarms, the world leader in vertical farming. AeroFarms has been innovating in vertical farming at scale for 15 years and elevating the agriculture industry, helping solve the global sustainability and food crisis. We are proud to have been recognized more than anyone else with over 50 awards for our industry leadership and technological innovations. AeroFarms is on a mission to grow the best plants possible for the betterment of humanity.
Our vision is to build farms in cities all over the world to allow everyone to have access to fresh, great tasting, healthy food all year round.
Our technological expertise in plant biology makes us great farmers. Our commitment to the planet makes us great stewards for future generations. We are a certified B Corporation with a transparent scorecard on both the environment and society. We are proud to be using business as a force for good and serve as an inspiration to the broader universe. We partner closely with our communities. We hire locally. We work with the local economic development groups like the New Jersey Reentry.
Looks like that mute there.
Oh, the good old-fashioned mute. I thought you could hear me through my screen, but no, you probably can't. Let me mute there. But there you go, guys. As you guys can see, a developing company here. So, Chris, let's go ahead and bring on our guest.
Yeah, great video there. Great, insight into some of those farms. We're going to dive into that today. So super excited. Joining us on SPACs Attack, another exclusive interview. On today's show, we have David Rosenberg. He's the co-founder and CEO of AeroFarms, a vertical indoor farming company going public with Spring Valley Acquisition. That's ticker SV. Welcome to the show, David.
Yeah, great to be with you, Chris. Thanks.
All right, let's dive into some questions here. So obviously we focus on SPACs here on SPACs Attack. So the biggest question we like to start with is, why choose a SPAC to bring your company public? And was there consideration for a traditional IPO instead?
Yeah, a few points there. First, it's the right time for AeroFarms to go public. We are at a point where we've proven the unit economics, at least for leafy greens, and we've grown about 550 different varieties of plants. But for leafy greens, we've proven the unit economics, and now we're ready to scale. We've built a number of these farms, and we're ready to take what we've learned and go forward. And the capital is really wind at our sails. The capital markets are very efficient, especially in the U.S. The gap is on debt, senior debt, and for earlier stage companies that need capital to really build projects, infrastructure projects. Equity is often the capital facility to do so. So we do have a fully funded plan that builds 16 farms, leafy green farms in our pro forma, rolling in and substituting debt in around year 23. And in terms of SPACs allow us to really tell the story more cohesively. So the obvious difference is one could use pro forma earnings and communicating that story versus an IPO is mostly backward related. So this, as a tech company, it allows us to tell that story. Spring Valley, these are good guys. We actually had a lot of suitors and cut off the process relatively early because we really like these guys. They had success with a similar company, Regi, in the past that is now a $10 billion or $8 billion valuation company, sorry. And they understand our stage. They understand the long-term goals of the company and how we're really building a platform to have broad applicability, broad impact, and they're company builders. So they're operators, they're company builders. So it all felt good. JP Morgan, the bankers involved, all really helped. Everything came together very nicely. And now, as a public company, we could hit the markets as we use our platform for other uses. So again, our plan is fully funded to do what we communicate in our pro forma, but there's other applicabilities like strawberries. We're even going into plans for pharmaceuticals. There's a lot of ways we could have impact. People don't realize the applicability of plants and how it impacts our daily lives.
Awesome. Yeah, lots of great, background information there on the company. I definitely want to circle back to some of that later on in the questions with the addressable market size. But one of the things that stood out for me is you're a certified B corporation, and, talk about the public benefit. So on a mission, to really help the betterment of humanity. Can you talk a little bit, about that mission, that you have and the company has here? And what a B certification is all about.
It's really part of our DNA. We're very much focused on, as we build a company, what's the impact for the environment? What's the impact for society? What's the impact for shareholders? Where we have strong shareholder impact, then that gives us the ability to have broader impact to scale much more impactfully. So a B Corp is a way to communicate one's societal and environmental impact. There's just a handful of companies that are B Corps in the public markets. It has gotten us good attention. I think it'll continue getting us good attention. It's not, we actually, it was an afterthought at first. In 2017, when we got the B Corp, we did it, and we didn't actually have to change anything we're doing at the company. It's just wired in our DNA. Let's say you need a score of, I forgot the numbers, like an 80 to be a B Corp certification. Organically, we got a score of like 100. So we were already just walking the talk, but it is a good roadmap to how we could be even better than we are. And we do realize that it's important to use our voice to communicate the societal and environmental goals that a company should have and intertwine within their business model. So we have a mantra of how do we do more with less? In agriculture, that means how do we grow a plant using less water, less electricity, zero pesticides, not organic pesticides, zero pesticides, herbicides, fungicides. So the human health, the environmental health are all crucial to what we do. People don't realize the pressures of the environment that agriculture gives to the environment. The world's lost 30% of its farmland in the last 40 years. 70% of our freshwater goes to agriculture. 70% of our freshwater contamination comes from agriculture. If we want to solve water, we need to solve agriculture. You take all these macro stresses with the other stresses like population growth. There's a lot going on. And fortunately, there's a technology wind, like in our case, enabled by LEDs to really meet these challenges. But to your point in B Corp, it's a way of communicating we're all in on the environment, society, as well as shareholder impact. And it's a way to impact and to spread that message.
Awesome. So, with the B Corp, you mentioned you got, some attention there. The other thing that I saw was this Food Tech 500 list. So, AeroFarms has been on that list for several years in the top 3. Can you walk us through a little bit of what this list is and why it's important, for AeroFarms to be considered one of the top companies, to fit that criteria?
So we win so many awards, I kind of lose track of them. I do know this one, we actually, in the last 2 years, we were ranked number 1 and number 2. So and that's a stack ranking of all the food tech 500. I don't know much more than that, but what I think is appreciated is this is a whole new industry in vertical farming. It's going to be huge. So just again, looking at those macro tensions, there's something called Heitz's law, which is analogous to Moore's law. Moore's law talks about computing speed. Heitz's law talks about the efficiency of a diode improving by 50% every 3 years and the cost going down. So if you think of how many LEDs are in your home now versus 5 years ago, that really speaks to the adoption rate of LEDs. And that's really, in my mind, I'm not from the agriculture world. I'm a kid from the Bronx, but here it really set off a light bulb, no pun intended, that as the cost structure of a diode goes down, this industry could be massive, coupled with, again, those environmental macro tensions. And here we're the leader of a whole new industry that's going to be massive. As the cost goes down, more and more plants are going to be viable and grown in this sort of area in vertical farming, whether it's on the equator or in the North Pole. We could grow anywhere. And I think we got this award because of the appreciation of we need a new paradigm of how we're going to feed our planet. Companies like AeroFarm are leading the way of a whole new space that's going to be massively impactful. And again, today it's leafy greens. We've grown 550 different varieties of plants. So next it's probably going to be berries. Our pro forma from an investment standpoint is all leafy greens. So everything outside of own farms leafy greens is just upside for our shareholders. But there's a lot of ways we're going to have massive impact.
Awesome. Yeah, you hit my next question, which was going to be talking about, starting with leafy greens. So let's dive into that Dream Greens brand, which you can find at major retailers. So I'm seeing Whole Foods, ShopRite, and also Amazon. Can you talk a little bit about some of your retail partners and what that means for validation here and, growing AeroFarms going forward?
Yeah, a few points. Well, first, we set out to have a representative set of customers that really could be copy pasted anywhere in the country. So a mass market retailer like ShopRite, a specialty retailer like Whole Foods, e-commerce, Fresh Direct, Amazon Fresh, and food service, Baldor. Those are all leading names in their respective categories. And we have great sales. So what's also great is, and this is my biggest surprise, by the way, is we're winning. I used to think of it intellectually as a supply chain play. We are disintermediating the supply chain from farm to city, farm to fork. And that's key. In leafy greens, 60%, 60, spoils once it comes off the farm. So 100 pounds come off the farm, only 40 pounds get consumed. So there's tremendous waste in the supply chain. And that's when I say I used to think of it as a supply chain play, disintermediating the supply chain. Now we're actually winning, and this is a surprise for me, on taste and texture. And this is the benefits of fully controlled agriculture. You think of, like, we all have eaten good fruits and vegetables, bad fruits and vegetables, and you ask the farmer why, and it was too sunny, too cold, too hot, too dry, whatever it is, it's the environmental stresses. But here we could understand what is great for a plant, what makes it great, and how do we deliver great every day so the customer has great taste and textures. So we're winning off our taste and textures. So you'll see on this slide you brought up our net promoter score. That's essentially a common metric used in CPG, consumer packaged goods, of one's likelihood to recommend to your friend. And our net promoter score is about 50% better than the industry. So people are really choosing us. Also, units per store per week are another key metric. And our units per store per week, how much of a product people are buying, are leading in our category. So people are buying us because of our taste and textures. What they don't know, or they probably know less of, is they actually should buy us for human health. So there are all these pesticides, herbicides, fungicides. And if you think about what that is, those are chemicals meant to kill things, whether it's bugs or weeds or things of that nature. And most people incorrectly assume that when they buy organic, it means pesticide free. Like 90% not the case. It's what it means is organic pesticides, but those are still things that aren't necessarily made for the human digestive system. But at AeroFarms, you don't wash. There's no need to wash. It is clean food. There are no pesticides, herbicides, fungicides. So just eat it, and it's much healthier. And people don't stop and think when it says triple washed on a package, that means what it says. It's triple washed. Why? To get off the pesticides, herbicides, fungicides. When you actually go and look at what that wash means, after the first wash, it'll turn your stomach. It looks like milk. And that's the chemicals that are being washed off, pesticides, herbicides, fungicides. After the second wash, it looks less milky white. After the third wash, less milky white. But according to USDA, there's on average 7 different residue pesticides on the products we're eating. So here, it's a big deal having not organic, but zero pesticides, herbicides, fungicides. People don't need to wash, they just eat it. So we're winning for taste and texture, but we're also adding all this other value of fresh, as well as pesticide free, as well as a B Corp, really serving our people, as well as our communities around us.
Awesome. So, we mentioned some big retailers there. Part of the growth plan, is getting into more retail locations. As a publicly traded company, there's going to be, more pressure, I think, put on you to get into more retail locations. So what's the strategy here, to get into more retail locations, and how will that be communicated going forward on landing deals?
So we're very proud. We're opening up 2 facilities in this month, breaking ground. One is in Virginia, in Danville, Virginia. Another is in the United Arab Emirates. And that really speaks to the global breadth and impact. And just as a side note, that aligns with our value proposition. There's not much arable land. There's not much water in that part of the world. And we grow a plant using a lot less water and no arable land. So on a side note, I feel like I need to explain that. So plants, people think they need sun and soil. Not true. They need spectrum, and they need nutrients and micronutrients. So we're able to deliver with specific spectrum and nutrients. But let me answer your question, and happy to get into that tech side. So our customers, like I said, here in New Jersey, are representative of customers anywhere in the world. So in Danville, as it happens, our current customers could take on the capacity of about 60% of that next farm. But there are obviously new and different customers there in Danville. Our head of sales, we have a world-class leadership team. Our head of sales used to be one of the heads of sales at Earthbound Farms, and he's responsible building the relationships of the local retailers to take that product. Right now, the supply-demand imbalance is local food. The local food is the hottest trend in retailing. It's not a fad, it's a trend, and there's not enough supply. Most of the supply comes from California and Mexico, and it's shipped in. So it's very hard for obviously those farmers to compete locally because they're dealing with their local farmland. So we're filling that gap. And then additionally, we're able to add value in terms of these tastes, these textures. We sell at the same price as the field farmer in the category of organic. So for people that buy our product, it's $3.99 for a clamshell. So they buy the clamshell. That's the same as other products. So we're competing on taste and texture. We're not asking for people for behavioral change because it's the same price. And our customers are asking, our problem is we don't have enough supply. So now they're asking us for more supply. We're building that capacity right now. The next one's in Danville, and we have a pipeline as part of this investment. We have a pipeline of 16 projects, and we're going to keep rolling them out.
All right, I'm going to go ahead and jump in here now. One of the things that I wanted to focus on, and you've already been talking a lot about it, David, is the technology behind this kind of platform here. And one of the things that I could focus on, and I'll go to 3 different areas first. First things first is the aeroponic technology and how the plant's roots are able to receive optimal nutrition versus being in the ground. Can you explain me a little bit about that, David?
Yeah, happy to, Mitch. So the name AeroFarms comes from aeroponics. So roots want oxygen, leaves want carbon dioxide. So people might have heard of hydroponics. Hydroponics, the roots sit in water, and then one has to oxygenate the water. We get an extremely healthy oxygenation through misting nutrition to the root structure. And I mentioned earlier, no soil. So the growth media, which is the soil, the replacement of soil, if you will, in the facility you just showed is actually a cloth growth media that, by the way, is reusable and sometimes made out of recycled materials, recycled plastic bottles. But, and that again just speaks to the environmental piece. But that's just actually, while that was the cornerstone of our innovation, that's just a small piece today. And to show you the complexity just of nutrient delivery and growth media, we've probably used 100 different ways of delivering nutrients to the root structure and probably 80 different methods of growth media. And depending on what's called the root physiology, there's different matches that are appropriate. So for example, we have a different system for berries, a different system for tomatoes, for other crops that are in our pipeline to commercialize. But right now in leafy greens, it's aeroponics. We see about a 4-day benefit using aeroponics and hydroponics. And just to quantify that further, When I started, we were growing a plant in 20 days. So we put a plant in one of those towers, 20 days later, we take it out. Today, that's 14 days. Just in the last year, we went from 16 days to 14 days. That means we went from about 23 crop turns a year to 26 crop turns a year. That means per capital expense, we have more output, more revenue, better IRRs. So there's tremendous innovation here. And that's just if for your audience that aren't farmers, like a funny way of thinking about it is like if think of a child that's eating differently, exercise differently, sleeping differently. One healthy habits than other child, unhealthy habits. One child is going to be bigger and stronger than the other child. Part of it is genetics, but part of it is the environmental stresses. So we are excellent, I would argue the best in the world at understanding the environmental stresses and how to deliver those environmental stresses. And there are huge opportunities. So when I say we went from 16 days to 14 days, in the same towers, it's just knowing what to give the plant when and how. So as an example, to build further on, a plant doesn't need sun, it needs spectrum. But furthermore, it needs certain spectrum at certain intensities, certain frequencies at different maturities of a plant. Just like you'd feed a baby something different than you'd feed an adult versus maybe an elderly person. In the same way, plants have different maturities. We joke around, we're the plant whisperers. I would argue we understand plant biology at unprecedented levels. And I would further argue that the world is relatively ignorant on what makes a plant grow. And we are at the cornerstone of unlocking this mystery of plant biology. And it's not surprising if you think of it intuitively about scientific experimentation and the process of experimentation. And my last company was a nanotech company. One needs to isolate a variable, test an assumption, and keep going from there. That's almost impossible to do in the field or in a greenhouse because there are too many uncontrolled variables like the sun, the weather, temperature. You can't control that to have a scientific experiment. But here we can isolate and say, all right, let's try a slightly different spectrum. So here you'll see in that image, a little bit of blues, a little bit of reds. Most of that optimizes photosynthesis. Spectrum that doesn't optimize photosynthesis or is too much, we strip away. So we look at the chlorophyll level and understand how to optimize that both decreases our energy footprint, also helps with what's called attenuation of the diode. There's so much innovation of what you see right here all over the place. So you had another slide you showed 282 invention disclosures. Since we've been talking with the public markets in the last month, that's gone up to 291 invention disclosures. We are an IP machine. So in an industry that's going to be massive, how are we sticking flags in, thinking defensively and offensively? By the way, monetizing that IP, it's not in our pro forma. That too is also upside for us. Our luminaire, we develop our own luminaire. We have a high-end, a low-end luminaire. There are thousands of sensors here. We have a whole system of digitization, our MES, our SCADA system, our PLCs. That's basically the control. So how at a touch of a keystroke, we can control the environmental stresses. We're as much a data science company as anything else because we owe it to ourselves to understand what the plant wants and how to deliver it.
Yeah, David, one of the things that I'd stress is that, a lot of people think that the sun is perfect in growing these plants, but really LED can definitely step in there. And like you mentioned, add a little blue, a little purple, the mix of the spectrum is what really gets a little bit even more perfect than even our sun above us, right, David?
Yeah, my co-founder wrote a white paper on why the sun is not free. And if you think of the term, the greenhouse effect, referring to global warming, how did it get its name? It's because greenhouses get really warm. And just so you could visualize that, let's say in our understanding, a plant wants 70-degree temperature between plus or minus 2 degrees. And if a greenhouse gets to be 100 degrees, then a large part of the year, they're not really getting what they want. So here, again, at a touch of a keystroke, we could deliver the environmental stresses that plant wants to be at its best. And that's what we're striving for. On the spectrum side, what's pretty cool is you could actually change nutrient density. So you think of your mom saying, hey, you look pale, go stand out in the sun, get some vitamin D. In the same way, we could give bursts of spectrum to influence the nutrient density. We give a burst of, for example, UVB. The plant gets stressed and all of a sudden it creates high antioxidants. And then you have people that as customer, they like getting, hey, let's get fortified vitamin D or antioxidants, things of that nature. That's part of our future.
Yep. I would jump into here the precision control. And one of the things that I notice about plants a lot of the times when grown indoors is how we can add, let's say, carbon dioxide and control those levels to try to help the plant out. Can you explain a little bit more about that, David?
Yeah, I mean, plants are carbon based. So there's an element of carbon sequestration here. We do add supplemental CO2 to the plants. And that's another way of like, how do we get a plant to grow better, grow faster? And what does it want to essentially breathe or absorb? And that's like one of the many tools in our tool chest. And back to the comment of the world, like you can't make those adjustments in the field. It's very hard in the greenhouse. There's a lot of ventilation that works here, working 3-dimensionally. When we put CO2 in, it really, like those levels, there are 12 to 14 levels of growing where we could really optimize that. We have, in the fully controlled environment, we have 26 harvests a year. Like I said, in the field, that's about 3. So it's night and day. We actually call those 26 learnings, not just growth cycles, because every time we grow, we learn. And then there's a neural network effect where when we learn, we become better farmers, better IRRs, build another farm that gets us more data. So how do we all attach these farms to our neural network? That's why we put a lot of money and resources into the digitization, both to digitally control a farm and to take information from a farm, separate it into its various use cases. And just here, it's helpful to go into some of the partnerships. So partnering with Dell Technologies and creating our infrastructure. So we partner with a lot of people, big companies, small companies. I'll share we partnered with like Bell Labs on our machine learning system, machine learning and machine imaging system. So we had a problem of how do we image every plant every day, and it was really a problem that was harder beyond the capabilities of our company to elegantly solve. So partnering with Bell Labs and bringing that to fruition, helping us create a system where 18 engineers work with us to create a system where we could image every plant every day, rolling this into our next farm.
Awesome. I want to jump into the total addressable market before we get into some financial projections. So, I'm seeing, a $1.9 trillion figure. We've got a couple slides here too, talking about new product categories and those partnerships that you just mentioned. Can you just talk a little bit about, that large market opportunity that a company like AeroFarms has here?
Yeah, there are 2 parts here. So I'll talk to this slide, but just quickly, there's the produce market, which is over $1 trillion market. We're focused on leafy greens, which is, I think, a $78 billion market. And that's our beachhead, if you will. But when we talk about AeroFarms, it's really, we're building a platform. So a platform to us, it's the mechanical side, frames, pumps, lights, fans, all that. And then it's coupled with the biological side, so understanding biology, how to deliver what a plant wants. And then it's the environmental side, it's the operational side. We have lean manufacturing, total process improvement embedded in what we do. And it's the digitization as well as the genetics. Like that's nature versus nurture. The nature is half of it. How do we get the best genetics for our system? So all of that's a platform, and building that, it's not just about leafy greens. So that's our beachhead, but we have much broader applicability. So here, this is the $78 billion leafy green slide. And by the way, leafy greens is growing at 7% a year, and local is also growing. 58% of shoppers prefer local. 93% of shoppers said if they had local available, they'd buy it. But back to the other slide you were on, the broad applicability. So we're getting into berries, and we've grown like the best tasting berries you've probably ever had. And if you're local, welcome you to come visit us in Newark. At our headquarters, we have 4 buildings in Newark: a prototyping facility, an R&D facility, our headquarters, and also a commercial facility. We actually just built a 5th building. But there's a tremendous amount of innovation. Here, the next column is pharmaceutical side. So people don't realize pharmaceuticals, nutraceuticals, cosmeceuticals, a lot of what we interact with every day are plant-based. Here, as an example, we're growing a plant that produces a protein. That protein is used as therapeutic in clinical trials with the NIH for COVID, to treat highly symptomatic people of COVID-19. And additionally, using plants for new genetics. So if you've heard of CRISPR-Cas9, it's the Nobel Prize in Science for 2020 was CRISPR-Cas9. It's a genetic editing tool. We co-developed the first in the world CRISPR-Cas9 product. It's a plant. And we are doing things like we're leading consortiums. We're other genetics players. We're not a genetics company. We have geneticists on our team, but other genetics companies, they work on our platform to create innovation in optimizing new seeds. And there's the opportunity of like we're creating all this technology, possibly it has applicability in the industry, in the ag industry, and we might sell some or license some of it off. But all of that, by the way, is not in our pro forma. Our pro forma is leafy greens. We're focused on building leafy green farms, selling leafy greens. This is all upside for shareholders.
That leads us into some of these financial projections. So, I've heard you now say both the IP and then also some of these other areas not being in the pro forma. So, I was going to ask, how do you get to some of these revenue projections and make sure you hit them? But, I'm inclined to say that maybe we're erring on the side of caution and, with some of these estimates. Can you just walk us through, a target of $1 billion in revenue by 2025 and profitability in 2023? What are the key points to get to those key figures there?
So that's all building leafy green farms. So here, the guidance was that we've got from our bankers like JP Morgan, Cowen, Wells, was show what you could hit. And furthermore, we understand like some of the criticism of SPACs or people get overly aggressive in their pro forma. So the other items I mentioned, they're more episodic. It's hard to predict when they're going to hit. And I mean, even though all of those, there are activities going now that will bring in revenue, but it's that do or will bring in revenue, but it's too unpredictable. So with the public markets, we want to be predictable. What we're showing is what we have high confidence in is predictable and what we control. So leafy greens, we know the unit economics of leafy greens. We know the customer base. We know our product sells, all these things. So we're just showing leafy greens. We're telling the markets we're doing all these other things, but we're not going to put it on our pro forma. When it happens, but we're not going to make any promises there. We're making promises on leafy greens and how we're going to hit leafy greens. And here we're building 16 farms. We have a fully funded plan. We're bringing in debt in 2023, but people are getting our enterprise value of 800 million. It's people are getting our last raise. The company's raised about 200 million to date. We have close to 80 million on our balance sheet in cash heading into this transaction. So the company's well funded. And here, we're like our last valuation a couple of years ago was 500 million. So we believe it's a modest step up from where it's really a private company valuation as a public company. And right now we have the resources to go and execute on leafy greens. So most of the company's focused on leafy greens. I'm going to be with the governor of Virginia in a couple of weeks on the groundbreaking of this new facility and keep going from there, building the pipeline of other leafy green farms.
Awesome. So, in that original SPAC deal announcement, it looked like second quarter to close this deal. I know you can't go into specifics, but are we still, on track for this deal to be closed in the second quarter?
It's probably going to be, I understand, like mid-July, so just after.
Okay, perfect. And then if you don't mind, David, we do have some questions from our chat today we want to get to. So one here from Siggy is talking, what other companies are in vertical farming as far as competition goes? Yeah.
So there's a bunch. People read about AeroFarms, they get inspired. I think they think, hey, I could grow a potted plant. I could be a vertical farmer. I think it's not necessarily an industry where there's a networking effect where there's one winner and everyone else is a loser. I think we could have several winners. I do think there are going to be a lot of losers. The devil's in the details. At the end of the day, we need to be competitive with the field farmers, with greenhouse farmers. And it takes a lot of things to get a plant growing well at excellent yields and excellent quality. And also all the other ancillary things that need to happen to not just be a grower, but be a farmer, have a business. And I think a lot of people don't appreciate that and don't appreciate scale. So for example, we've been growing berries. We had a public announcement with a partnership with Hortifruit, which is the 800-pound gorilla in blueberries, but we've also been growing strawberries for a number of years. And here we're not ready for commercialization on paper and in small farms the size of we have several chambers growing strawberries 20 by 20 by 20, but scaling it up, there are often intuitive problems to scale that I think the people that just haven't built at scale don't realize. So the farm that was shown before, that's the largest vertical farm in the world as far as we're aware. And we use it as much as a pilot facility as well as a commercial facility. So when we test something out, we're able to bring that innovation at pilot scale. At commercial scale and see how it scales. Because again, the scaling issues are unintuitive. And I see competitors thinking, oh, I have a small farm, therefore I could build a big farm. I think a lot of people are going to be building big, unsuccessful farms in different places and have the pain. That's where my comment is. I think there's going to be a lot of losers, but there are ultimately going to be a bunch of winners. This industry is going to be too huge. The macro tensions are too big. The technology advancements are too strong, led by lights, but other ways, digitization, and it's going to be a huge industry.
All right, guys, I'm going to jump right back in here, and then we'll go from one more from the chat. But what I want to ask about is, of course, future revenue. And, one of the things that we've been really kind of focusing more on SPACs is the revenues and how it kind of we're looking at this change in the stock market more into value. And so that's why I'm going to bring up these numbers here. As you see, comparing to AppHarvest 4.6 compared to 2025 of 2.6 and even lower in 2026 of 1.5. So definitely evaluation wise, why do you guys compare to your or looking better than your competitors here? What would you say about that, David?
Yeah, and plus I'd say we're a technology company. Other players like AppHarvest, which we're often compared to, they're an integrator. They're a greenhouse grower. We're a vertical farmer, so it's different. The macro issues of how do we produce food more locally, they're focused on Kentucky, but more locally than versus Mexico or California, are relevant for both of us. And the stresses on the environment are relevant for both of us. We're both B Corps, and we both have strong positions for the environment as well as for society. We're very much creating IP. Like I said, now it's like 290 some odd invention disclosures. And beyond just executing, we're also a technology company. Here, I think I'm obviously biased, but I think there's a good deal for the shareholders. And this is where it's our bankers were suggesting that we come out at to make it attractive for investors. So I think it's a good deal. Again, I'm obviously biased, but I think people are not only getting the execution side, they're getting an established player that already has great relations with the customer, already great sales. Like I said, leading net promoter score, leading units per store per week, but also a lot of technology and broad applicability of that technology.
Awesome. And then one more from the chat here. Have to ask, we have a question from Logan here, do they plan on getting into the cannabis industry? I'm not sure, David, if you can go into specifics, but thoughts on cannabis, or is that a wait and see or a definite no here?
What I could say is philosophically, I'm for legalization. Unless it does something hurt someone, like constitutionally, I think people should have freedoms and rights to do things. So I think it should be legal. I was a co-chair of Governor Murphy's ag committee when he came into office. That's the New Jersey governor. And this was one of his most important priorities. And now it's legal in New Jersey. So I'm for that. AeroFarms certainly will not be a dispensary, but our technology, a lot of what's in the cannabis industry, in my opinion, it's really scaled up mom and pop technology. And there's a lot of sophistication that could go a long way. And I think our systems, we have on the engineering side, we have mechanical, structural, lighting, electrical, PLC, process, industrial design. On the plant side, we have plant biologists, physiologists, pathologists, molecular biologists, microbiologists. We have like a ton of brilliant people at the company working to solve really important problems. And those problems are relevant in cannabis like they are in kale, arugula, watercress. So I think there's a big value we could add to the industry. No comments now of where we're going to play or if we're going to play, but it's not a philosophical issue. It's more of a focus and when's the right time for us and where we should add value.
Yeah, it's going to be something that I'll definitely focus on. Just one of the things, like you mentioned plenty of times, no pesticides in that industry. That could really take off, just even that itself. Yeah. So definitely appreciate you bringing that up, David. And I also appreciate you at least giving us a little bit about your opinion, because at the end of the day, we want to know a little bit more about you, David. And I really appreciate how you took today's interview, going into a lot of the technology side, giving our viewers a lot of information. So appreciate that, guys. Hit the thumbs up.
Yeah, and I got to shout out. We even have a comment here from Webcoin talking about maybe AeroFarms can grow on Mars and in space someday. So, exciting times for vertical farming. We want to thank you, David, for coming on the show. So again, guys, David Rosenberg, the co-founder and CEO of AeroFarms. Company is going public with Spring Valley Acquisition. That's ticker SV. Thank you, David, so much for your time today.
Yeah, pleasure, guys. Be well. Thank you.
Thank you.
Thank you. As you guys heard it there, guys, David coming through. I honestly was really impressed by the way that he approached his answers. One of the things that I always like to know is, does my CEO know the product, know what's underneath him, know the technology, know how much his engineers are working on the technology? And as you guys can see from his answers, those were not just yes and no's, very detailed. So I appreciated that. What do you think, Chris?
Yeah, Mitch, I actually wrote down some notes here. And, what stuck out to me, right? We keep talking about revenue, SPACs, forward-looking financial projections, and it's been heavily criticized, right? These companies projecting all the way out to 2025 or, some companies 2030. You heard David say it, though, right? Those pro forma estimates don't include several things. So to me, they guided conservatively, whereas some of these other SPACs may have guided, with their top numbers they could possibly hit. And those are the ones that have gotten hit, right? Because they have to guide lower later on. So to me, I wrote down the intellectual property. So you asked him about patents and that IP, Mitch, and he said that's not in their revenue projections, right? They could license that out later down the road. And then also those other areas. So like pharmaceutical, is not in their projections. You heard him even talk about helping with COVID-19. And then that CRISPR technology, right? We saw some of these cannabis companies that started getting into pharmaceutical. It changed their valuations tremendously, right? Because it was a whole nother area of revenue. AeroFarms doesn't have that in their projections. Like, this is super conservative to me then. And then, Mitch, the other thing I wrote down at the very top of the show, he said they had multiple suitors. They ended the SPAC process early, but yet we still get that $800 million valuation. This is a company that could have been greedy probably and could have gotten a huge valuation, but they didn't, right? This is the type of company I want to get in because I think the valuation here is fair. And I think the guidance is conservative. I mean, what do you think, Mitch? You heard it straight from David's mouth.
Hey, I was paying attention. One of the things is, as you guys hit me up in the chat, and light spectrum, guys, you guys heard him talking about. I'm telling you, there's one thing that I've noticed is that where we're going, if we're really moving into, let's say, global warming, and we have to worry about kind of changes in climate, changes in environment, growth is going to be very important on how we continue to sustain our lives that we do on an everyday basis, right? And so that's one thing that I'm definitely going to be watching is how can we keep this going and not worry about, like you mentioned, pesticides, so many cancers that come from these. I definitely don't want my foods with pesticides, even if they're washed or not. So I'm definitely going to be looking out for these in my neighborhood supermarket. So I don't know if you've seen these before, Chris, but definitely it's something to think about because, like you mentioned, just because something's washed doesn't mean that there's no pesticides on there. So
yeah, and I liked that whole conversation about, right, what does organic mean, right? Like, I don't know. I guess I wasn't, as aware either. And the fact that there's organic pesticides and you have a company like AeroFarms here, zero pesticides. I think that's an area we're moving in, right? And they're already in, Whole Foods, on Amazon, and in some of these other stores, and they're building more farms. They're going to be able to keep expanding. So this is a company I think you're going to see their products in lots of stores. And again, I love the conversation on being conservative here because that's a big plus for me.
All right, guys, I'm going to pull up the chart here. This is SV here, guys. So just want to show you guys, this is down underneath $10. One thing I definitely point out, guys, is this volume bar that it came off the 980s. Somebody, I don't know who it is, but somebody got a pretty good share size there. So I'm not sure what happened exactly at that moment. I'd love to take a look maybe at a 15 minutes, see what we saw on the chart, see where the spike comes from. But definitely it's going to be something to keep an eye out. Lots of volume that came in there. So I'm not sure who loaded up the boat there, but definitely looking like somebody jumped in there big. I'm going to keep an eye on this one. If it gets through that $10 level and then we get back through that wick was up there to 1025. So pay attention to that 1025 level, guys. When we get through that 1025 level, if we could see millions of shares traded again, because this stock averagely trades around, let's say 200 to about 500,000 shares. So when you see that over that million mark, that's what I need to see a continuation, to see if maybe this was just a big buyer that stepped in there on the March 26th and gets this stock moving. But definitely, like we've been mentioning and I've been focusing on, is the reoccurring revenues, where the revenue's coming from, evaluations comparing. So that's why I went into the benchmarking. A lot of people are getting to this point where in SPACs, what you need to be looking at is the revenues and how the value matches up to other companies. To me, as you guys can see from the multiples, the valuation is definitely there. And at this price, I like it. You know, you're going off these supports back in December. And now, as long as it can kind of hold this 980 on the downside, hopefully this was a big buyer stepping up there on the 26th of March. And now if we can get back above 1020s, this chart would definitely be looking good.
Yeah, and Mitch, pull up APPH, right? So App Harvest, you know, that one traded around in the 20s, I think, when the deal went through. And then we saw shares go up in the 40s. And then now we're around 16, right? So, you know, it had some movement, you know, post-deal. And to me, the question with SV is, you know, will we see a similar move? Is this one going to run up into that vote, and then will it get some momentum, you know, coming out? I did see, you know, App Harvest had a couple interviews, right? They were on, obviously, our show, but before that, they were on CNBC. You know, the day I think that went public, they also got a mention on one of the morning shows showing off that technology. So, you know, if a company like AeroFarms can get out there and, you know, get some of these videos with their technology really out so people can see it, you know, I think the competitor here, I think they beat them on several fronts. And I think maybe, you know, investors who like the story in APPH may want to take a look at SV here at these levels. So, you know, that's what I would say there on AeroFarms.
Agreed. I definitely, I have this on mute here playing there, guys, but their technology definitely seems advanced. I think one of the things that I would love to see from this company, and I'll put the right ticker up here, but I would love to see some more kind of videos coming out, some more social, getting it out there, getting the word out there, exactly what their technology holds. Because, you know, I did some research and I found it, but I had to do a little bit more deep dive. And I think, you know, that's definitely one thing I'll definitely give some feedback to David. I would love to see more of their technology out there, a really great YouTube channel, because at the end of the day, there's a lot of the things that I think I could see in here, how it can change, let's say, even farmers' lives, because, you know, this is definitely going to change their life going into a new industry here. So I would love to see some more of these videos, because I learned a lot even just from this video that I found on YouTube. I found it through their website, guys. If you guys want, in the description below, you guys will find that website where you guys can learn a lot more of their technology and check out their investor presentation.
Mitch, you want to pull up CLOV just real quick? Let's take a look at that. And the thing I'll say, guys, is, you know, yeah, this is a short squeeze. Be careful, right? Nothing's changed. There's no news out. And you know, when this company had a short report out about them, it took them over a day to respond. You know, and Clover Health, where I don't know where you are, but we tried to get you to come on the show. We got turned down. We've had lots of CEOs on here. We'd love to have you on. We'd love to hear more about the story. But to me, some of the same people talking about the short squeeze and mentioning Clove today on Twitter are the same people that told everyone to buy this in the $14 to $15 range. So be careful. There's still bag holders out there. Don't get caught. I don't know if this one sees 10 today. If it does, you know, the big move's going to be today, maybe tomorrow. But I think this story dies down. And this is one, again, that's, you know, traded all the way down into the 7s. don't get caught chasing this just on a short squeeze today.
All right, guys. Looking like we'll have the power hours coming on next, guys. So definitely stick around for the power hour. But like Chris being mentioned here, this one really ripped. The biggest thing though, that Chris, is that I think this has nothing to do with the company itself. Like being mentioned, it's probably a short squeeze here, something that you can follow on. That's what I'm going to be looking at to see how much of a volume we could pile in, because look at the volume and look how it's matching. 76 million on that pop on the 8th. And now look, 46 million. That's what you want to see. You want to see above that 28 million. That's what I talked about last time when we pulled back right here. And so I said, can we get some share volume higher than that 28 million shares traded on the 9th and get into, let's say, 40, half of this bar? This was 76 million. Now we're trading about 47 million. So definitely the volume is continuating. And the biggest price point to me now is going to be $9 because it gets through a big resistance there. Next stop is 10. At that $10 level, you might run into overhead supply from people selling on this breakdown of the move through 10. So just be careful, because I think you will run into some resistance near that 10. If you're making some good, profits, a lot of the times I say determine what your reward target really is, and that's so important when you're trading, guys. Is know your reward, know your out, and have a complete trading plan for every trade. All right, guys, that's going to do it for us, guys. I hope you guys enjoyed that interview that we just did, guys. So if you guys can do me a favor, hit the like button. Over my shoulder, you guys see the video playing. We're trying to bring some new things. So if you guys can do us a favor, definitely hit that share button and let us know how we've been doing lately in the comments below. One thing I want to do before we get on out of here, I want to play a new video that we got. Guys, if you haven't heard, we got a Clips channel, so definitely check that out. That Clips channel will get you to our SPACs Attack list. Our SPACs Attack list will actually be just us. Like, you have a playlist just for us, our clips, get it nice and quick. And one of the things that Chris and I have been doing is definitely getting that information to you in a faster way. So check out those clips. Brohan, if you're in the back there and you can hear me, if you could do me a favor, throw up the link to the Clips channel in the comments. I'm going to go ahead up and play a new intro kind of subscribe video that we have now. And if you guys can do us a favor, if you guys agree with these guys, hit the like and subscribe. Anything you want to leave off with, Chris?
No, that's it. Thanks, everyone. Have a great weekend. Don't go anywhere. Stay tuned for Power Hour coming up next.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
That's what I love about you guys. You just had all your callers in right then. It's all about the community here at Benzinga.